What's going on, guys? SmartHelping.com here. No stream today, but we're going to do the overview for the mobile app uh, template that has freemium and in-app purchase logic. It's been fully updated. This model's been out for a couple years now. It's the first model that I did where we have dynamic retention cohorts with matrix style logic. It's really cool. And that actually logic stayed with me for any SaaS model I made after this because it's really nice. So here, all the base logic's the same. We've just added an income statement, balance sheet, cash flow, monthly and annual, as well as a cap table. And then we cleaned up some formatting. We added some sanity checks here. I'll go through each tab with you and explain how it works. So, global control tab, what we're on now, you can type the company name, the launch year, the end month, exit month. Where this is essentially the month you want it to end, which it can be up to 5 years or 60 months. You can also decide if you want to include a terminal value at the end month or not. If you hit yes there, you can put a multiple here, and then based on the trailing 12-month revenue of whatever end month you pick, you'll get an exit value. You can then pick some cash sources, so any debt would be entered here, and then investor owner equity is going to come from the cap table. You could also do some income tax rate, capital gains tax rate. This is, if you don't want to deal with taxes or don't want to put them in the model, you can zero this out, but it is here and is based on annual net profit if it's positive. If we go along, this is the meat and potatoes of the model, revenue and growth tab. So you can define the start month of ad spend. And this is the first traffic driver, and then you're based on some CPA, you're going to have that many monthly signups to your free to the app, to the free version. You can then put, and if you only have a paid version, you could just put percentage of let's see, you would pick you would just pick 100% for the percentage of you put 0% for this row, so percent of new downloads that are free users 0%, so then 100% would go to paid subscription users. And then you could also define of that how much of those users are going to participate in-app purchases, and of that how many what percent of in-app purchases of all those that make a purchase are of type 1 through 5. So you can have up to 5 in-app purchase categories or levels. You might just have one and just put an average there. But anyway, the point is you've got your paid ads, traffic origination. You've also got organic traffic. This could be organic search, viral, social media marketing. You can put in a number here, and an improvement in that number as well as the month that traffic starts. And then you could define the percentage of organic traffic, which is here, that download the app. Obviously, the CPA is implying that the traffic from here are those that sign up for the app. Then, like I said, freemium logic, percentage of users that are free versus paying to have the ads removed. And then you put the monthly fee for that, whatever it might be. You can also define revenue here for ad revenue based on impressions and a CPM. We've also got percentage users that engage in in-app purchases, and then the month each of these streams possibly starts, as well as a percentage breakdown. And these don't have to be mutually exclusive. For example, if you had 100% for all these, it just means that every single user that participates in in-app purchases is going to purchase each purchase type. Then the nice thing here with retention rate, you can define the expected amount of years that you think users are going to be active, and that will define how long each monthly cohort of new users that joined is going to exist for. And I broke it down here into some different essentially annual retention rate of new users after 12 months, so 50%. That's essentially saying you start 2 years, so you don't know when they might leave, but between year 0, year 1, you lose half, and then year 1 to 2, you lose the other half. If you put in 20 years here, it'd be 5%. You essentially retain 95% per year. So 2 is half. You lose half each year linearly. Okay, so that's that logic. Fixed expenses, pretty simple. You just pick the start month, the monthly cost in each of these years, and you can also mark if it's a salary item, which will then apply to whatever payroll and tax benefits you enter here. So you've got some fixed expenses, some variable costs. This is percentage of revenue. And you could define how much of the revenue is applicable to credit card fees and then what that credit card fee is. You can also define the cost per active user here per month, and then other fixed monthly cost of goods sold items. These could be like server hosting, etc. If you can't capture it in this row, you could fill it in here. Startup costs, one-time startup costs. Debt schedule is just going to flow from the tab, and based on the start month, that'll flow through to all the tables. Make sure if you change the start year here, you update all of your months accordingly. CapEx is going to, if you have any depreciable items that you're purchasing, you can put that here, the useful life, the month of the purchase. Building is always up top. If you have a building purchase, you'll define that value after sale separately. The rest will come based on the percentage of exit value that you apply to fixed assets. If you select no on the include terminal value, then all of this on the CapEx will zero out. Cap table, you can define total shares, percentage of common shares, Class A and B shares, and you define the contributed capital from different investors, rounds, etc., and define the percentage ownership that each of them are buying with that. And then you get fully diluted ownership value that flows to distributions over here. You can also do the same for owners operators. Terminal value is going to be where you define the percentage of the extra income applied to, the percentage of exit value applied to extraordinary income versus fixed assets. If you put 100% here, it just means nothing's going to pop in to this, and the taxes when they're calculated for that exit, whatever year the exit month is, will use the full tax rate on that full amount. Then we've got our 3-statement model, which is fully integrated. You've got income statement here. Monthly gets down to net income. Annual is the same thing as a monthly, just on an annual basis. Balance sheet shows your assets, liabilities, owner's equity. Balance sheet annual, same thing, just on an annual basis. Cash flow statement, you've got your cash flow from operating activities, investing activities, financing activities, based on all the different assumptions that I'll populate. Same thing, but on an annual basis. Then we've got distributions, which is your discounted cash flow analysis for the investor pool versus the owner pool and the project as a whole. Net present values here as well in a visual. This is essentially taking any positive cash flow month and putting it up here. Any negative cash flow month goes here. Then you figure out how much of your equity you used on the initial startup cost. Remaining equity applies here, and if anything is any negative cash flows happen after that, it would go against whatever positive cash flows there are. This should always match the ending cash flow if you sum up all of this, and then add in the equity. So this is essentially the net cash flow of the project as a whole before any equity is contributed. Executive summary just shows some high-level line items on an annual basis. You got some return multiples here, internal rate of return on the project level, investor and owner level. Some visuals, these are all intact. Mainly advanced metric CAC, wants to payback CAC. We also did LTV to CAC ratio, CAC versus LTV. And so this ratio is kind of highlighting what's going on here between this debt line down here and these two up here. Monthly churn. Then the monthly details where you actually see all the different users and assumptions played out on a monthly basis over the 5 years or however long your forecast is set to go to. And this drives down to EBITDA and cash flow, and this will reconcile with the cash flow statement, balance sheet, distribution, executive summary. Same thing on an annual basis, or annual detail, but it's on an annual basis. And then these matrix tabs are how we make all the logic work with those dynamic retention rates. Very cool stuff here. When I figured this out, it was awesome. And this is dynamic logic for the payroll taxes and benefits. And that's the whole model. So you can do a lot of planning, strategizing here. It's a very comprehensive financial model. If you want to purchase it, it'll be in the link in the description box below. It's in the SaaS bundle part of that. You can find it there at the top of smarthelping.com. You can also find it on Eloquent and eFinancial Models. Just search for Smart Helping there. All right, I will see you guys on the next one.